We
hair
do let our
down.
hair down. You don't like to let your hair down. Let your hair down. Liquid Death, LD. Bye, I love you.
This is ridiculous. So this here is possibly the best marketing scheme there ever was.
It's just water, isn't it?
This is just a water. It's just water. People think they're cool drinking it. I think I'm cool. I feel cool drinking it.
Really?
It's just water.
Does it flavor it at all?
Murder your thirst.
Is it flavored? Is it
Murder.
flavored?
No. It's good. It's nice water. It's probably freaking overprocessed crap. All right.
Here we go.
Here we go. All right.
Yeah.
Alvin. Hi, and welcome to episode 28. This is That Mortgage Show. It's May 1st. What's on the docket, Alvin?
Oh, God. Woo! So,
And action.
Oh, good one, Ab. Oh, man. That's what 28 years of friendship will do for you. All right, yeah, a lot of exciting stuff coming up. Tomorrow's Star Wars Day. After that, Cinco de Mayo. Today, we're going to cover the Fed meeting this week, the rate decision, seller concessions, rate buy downs, and our wonderful guest, Dani Wareagle Warrington. Roll Tide.
Mm-hmm. We're gonna bring her in, and we're gonna ask her some market questions, see if we can't get a little market update from her. But first, we're gonna get into what's your rate. So, pretty big week as far as our industry is concerned. The Federal Reserve met.
Oh, God. I'm sorry. I'm good. You just got me with your joke. I'm sorry. You got me.
You're a drill buster. We're in line drills.
You're right. I am a drill
throwing the
buster.
ball
You're
and
right. I'm sorry. I'm back. Fired up.
All right. So this week was big in our industry. The Federal Reserve met. They meet all the time, as we know. You hear us talk about it. But there are only 8 regularly scheduled meetings a year where the Fed will vote on whether to raise, lower, or do nothing with the federal funds rate. This week's meeting was one of those. And if you followed along with our show or the Federal Reserve, you know that this is about the time that the rates were supposed to start getting cut at these meetings.
Yeah, supposed to be a glorious time. But by now, most people know that it's not glorious, at least not in the world of mortgage lending or as far as interest rates go. So the Fed decided to leave the Fed funds rate untouched. Basically got together and said, let's do something. What do you want to do? We're not going to do anything. So 6 meetings in a row that they voted to do nothing. So they think that rates are high enough basically to bring inflation down in due time. And they're also not thinking about rate hikes right now, right? Which is a small positive. So we'll take what we can get.
It is a small positive, and rate hikes were something that was never talked about, but kind of in the back of people's minds. The market yesterday, Wednesday, Thursday, the market reacted positively, and some lenders were pricing rate improvements. We saw about an 1/8 to 1/4 of a point better after the news broke on Wednesday.
Yeah. So, we have to take it as a positive. They came out. They said that hikes are not in the cards right now. We woke up today to a positive T-bill, right? T-bill came down a little bit, which is going to have a small impact on interest rates. So actually T-bill reached its lowest point in weeks, I think. So could mean some minor relief, but you're still going to feel some aches and pains. See how it goes.
Yeah, so this is really kind of nitty gritty details, but the 10-year Treasury bond, the yield was in the 4.6 realm, which was 4.6, 4.7, which was the highest it's been in months, and now we saw it break below the 4.5. I think it opened at 4.48 this morning, which is a good sign.
We're about 4.49 right now, 4.48. So.
Yep. So be on the lookout for some pricing adjustments. If you're in process, might be a good time to lock. So let's move on, Alvin, to our next segment.
Frequently asked questions.
Frequently asked questions this week, we're going to cover two topics. We're going to cover seller concessions, and we're going to cover rate buy downs. So, Al, just get right to it. What's a seller concession?
Yeah, so basically it's cash that the seller of a home is willing to credit back to the buyer, typically applied to a buyer's closing costs, reducing their cash that they have to bring to closing.
Right. And the seller is paying this out of their net proceeds. Money isn't exchanging hands between buyer and seller. It's just going to be applied on the settlement statement. And that settlement statement is just basically a giant balance sheet of credits and debits. So you've got your credits, you get your debits, and then you got your bottom line, which is your cash to close.
So, whether or not you're getting seller concessions is going to be something that your buyer's agent is going to negotiate with the seller's agent. Obviously, there's a lot that goes into that. So,
right. And it's just another reason why you're going to want to have a good team, an experienced team on your side helping you with that. So, when you're out looking or offering on houses, we, the lender, can let you know what costs are associated with a home, let you know what the down payment is, and then your agent can go out into the market with that information, and they can help advise and structure competitive offers for you. And those offers may or may not include seller concessions.
Yeah, and I mean, your agent should be confident enough in their knowledge of the market to advise whether or not your offer is realistic or not, right? Whether that offer should include seller's concessions. Obviously, it's going to depend on how hot the market is, how desirable the house is. There's, obviously a lot of factors that go into that. So it just highlights another need for a buyer's agent.
Right. So, for a seller, it's no matter what they say, it's all about the bottom line. They're selling their house. They want to put money in their pocket. It's all about the bottom line. It's a big part of your buyer's agent to know that going into an offer. So they're not, they're not overdoing it. They're getting you the best bang for your buck while not, pricing you out of the market. Like as a buyer, you want to buy the house. You want to get value, but you want to get some seller concessions maybe. It's your agent's job to be real with you and advise you.
Yeah.
So
try to get a deal. They're going to try to get you the best deal they can, but also not put in an offer that's a slap in the face to the seller that's going to completely, end that opportunity for you as far as buying a house. So you're getting seller concessions. Now what? Well,
now you talk to us. So if you get an accepted offer, you've got seller concessions. Now what to do with them? Well, we can help you allocate that money to make sure that it best serves you and your specific needs.
Right. So we'll help you determine, where is this money going to be best used? Is it best used to reduce your cash to close, to reduce your loan amount, used for a rate buy down, right?
Yeah, so there's definitely a lot of different ways you can apply the money, and there's no rule of thumb. It's gonna come down to a specific buyer on a case by case basis. What are your needs? What are your wants? Are you wanting to keep cash out of your pocket at a minimum?
Go ahead and apply it to closing costs, right?
Are you wanting to keep your loan amount at a minimum?
Put more down on the home since your closing costs are already covered.
Right. And lastly, are you wanting to minimize your monthly payment?
Apply it to a rate buy down.
Right. So there's many different ways to skin a cat here, Al, as they say.
Wouldn't want to be the guy that found that out, huh? Tell you what.
What if you me and you were friends and this saying of skinning a cat wasn't a thing, and you're like, I wonder where Adam's been. I haven't seen him in months, and then I'm just like, hey Al, there's 10 different ways to skin a cat. I've been skinning cats for the last month.
No context. Just you throw that out there, right? When somebody asks you wait a minute, are you sure that's how it's done? Yeah. Trust me, there's more than one way to skin a cat. Whew.
So to wrap up to wrap up our segment here, rate buy downs. When you're talking to your loan officer and you're qualifying your mortgage rate, there's going to be a spectrum of interest rates: high, low, little cost, no cost, credits. So you're going to want to talk to your loan officer, and if you're getting a large seller concession, perhaps you know your loan officer should be advising you, if we took this large amount of money you're getting and we use it to buy down the rate, here's what your payment would be monthly, and here's what how long it would take to recoup the cost of buying the rate down, and you guys can make a decision together whether or not it's the move.
To your point, there's a lot that goes into that. Of course, a lot of it depends on the market and what we anticipate in the future, right? Does it make sense to spend that money now if we think that rates are going to come down in the next couple of months, or if it's going to be a year or an extended period of time the rates are going to come down, then it probably does make sense to spend that money now for a lower interest rate, as opposed to taking the higher rate and trying to refinance. So a lot that goes into it. Definitely a conversation that should be had with the loan officer.
Yep. All right. Great. So we'll do our last segment, and then we'll bring Dani in. We'll rip through this one. She's in the waiting room, so we'll rip through this real quick. So our opinionated this week, I wanted to talk about this headline. It's been going around. It's been emailed around the industry and whatnot. So the headline reads, "Why hundreds of U.S. banks may be at risk of failure." Very scary stuff. But usually when you get into reading an article, the article kind of walks back the title, which is just so, but it's the game. I marked off two things I want to read here. So you know the headline now. Now, here's what the nuts and bolts say. Most of these banks are not insolvent or even close to insolvent. They're just stressed. So, high interest rates, the federal funds rate we talk about is the rate that banks lend money back and forth to each other. So they're paying higher interest too. So they're stressed, and the smaller the bank, the more stress. So to add to that, So the writer here adds that communities would likely be affected in ways that are more subtle than closures or failures. And what they mean by more subtle is like banks are less likely to upgrade things like technology and hire staff. And then, of course, less likely to lend money, especially risky money. The banks that are at the biggest risk here are your community banks. So like your small regional community banks, think like M&T Bank's gotten bigger, but M&T Bank is regional to like the Northeast. Seacoast Bank is a smaller regional bank. So banks like that. And those are the banks that are lending money to, your mid-range builders too. So the mid-range builders are going to have a hard time getting those new starts going if their money source is tightening up, which the worry there is, we have a low inventory problem now, and if new starts are going to be halted, that could just further the problem.
So, I love that. I think this is a great article, and I love your overview there. I mean, the title is going to have you believe that that these small time banks are going to have a runoff like George Bailey in the building and loan, right? But nice. The truth of the matter is, it's the small ones that are stressed. It's never the big ones, right? It's never the big banks that have the capital to cover that. And I think it's going to hurt the experience if these banks don't go under, right? The experience that you as a buyer have with that bank in terms of, the way they're able to conduct their business, and if they are struggling for staffing, technology, and upgrades and things of that nature, then it's not going to be as positive of an experience as it would be with a bigger bank, which is just going to drive business away from them anyway, right? So unfortunately, it's just another scenario where the little guy is kind of getting kicked out by the bigger guy. Hopefully we don't see it happen, but it's the higher rates are putting the stress on everybody. So
you'll need to continue on your.
Even Siri has something to say about it.
Al, thank God you're sharp, because you're always you know,
Always
something's always
happening.
happening, but you're always making the best of it. All right, so let's bring in our guest, esteemed guest, our first two-time guest.
Wow.
I mean, that's big time.
Name's going to have to go on the wall.
First two-time guest, affectionately known as the condo queen of Hutchinson Island, Dani Wareagle Warrington. Let's bring her in.
That is probably the best intro I've ever heard.
Yeah?
Oh my God, I loved it. That was
What's up, Dani?
well done,
How's it
Adam.
going?
Well done. How are you doing?
I'm doing great. Doing
Yeah?
great. Happy to be the first two-time guest on your show.
Oh my God. The celebration that we're going to have. There's going to be a parade in the streets, Dani. I don't think you realize.
That's awesome.
Yeah.
Let's go.
So, Dani, you were sitting in the waiting room for some time. Did anything we said that you want to comment on, whether it be about the need for a buyer's agent, like when it comes to negotiating, or we talked about seller concessions. Anything jump out at you? You want to add your 2 cents?
Absolutely. Well, the need for a buyer's agent, I mean, you need that. There's always been a need for a buyer's agent, but now more so than ever, just because, some of the things you guys talked about, whether it be, seller concessions, whether it be getting, the best price, things of that nature. Because right now we're in a market where there's a lot of room for negotiation for buyers. And if you don't have, the right team on your side, then you're, you don't want to pay top dollar. You want,
Right.
You want to get the best deal possible. So now more than ever, a buyer's agent is critical.
Yeah, love that. Couldn't agree more. So what are some of the things that you have seen that kind of in terms of those negotiations where your hands-on approach obviously is a heck of a lot better than what you're going to get if you were trying to do it yourself, right? If you could kind of outline some of those some of those things, the nuances in the contract that you negotiate.
Sure. Well, I think I just want to point out one thing first, if that's okay, is one of the biggest things is, especially with new construction, people walk in, they don't think they need an agent when it comes to new construction. But just for example, this past month, we got a client under contract. These asking prices were 1.4 and we got them a price of 1.25 million. So that in and of itself is a reason you need someone that's going to negotiate, because if you went in there without an agent, they're most certainly not going to give you that.
Right.
And some of the other things that we're seeing, especially you need someone on your side when it comes to, the inspections, repairs, negotiating all of those items. Because again, if you're not being represented, you're not going to know what to do. And there's so many legalities surrounding these contracts.
Yeah, and it's so easy for somebody, I guess that's why we need somebody like you to explain those things, right? The need, the necessity for it, because as a seller's agent, they have to do the best by the seller, right? They're trying to get the best deal they can for the seller. So if you don't have somebody representing you in your best interest, you're probably going to be taken advantage of, and not, just the way the business works, right? Everybody's trying to get the best deal for their person. So.
And look, 9 times out of 10, agents are technically transaction brokers, meaning that they do have to do what's in the best interest of, both parties if you're representing both parties. But it's really hard when you're trying to do the best for your seller and then you're trying to represent the buyer. It's like it can be challenging.
Yeah.
So yes, the right agent can do both, but then again, it's nice, to have your own cheerleader. Mm-hmm.
Yeah. So you said that there's room for negotiation, and it's partly why it's important to have someone negotiating for you. So, what would you say? And you can only everyone understands you can only speak on your market, Dani. But what would you say we're in the Treasure Coast area? Is it like, are we in a buyer's market or are we a seller's market?
Both. Is my answer.
That sounds complicated.
So it's interesting times, right? So if you're dealing like I do a lot on Hutchinson Island in the condo market. So that market has shifted a lot because right now, so this time last year we had 4.5 months of inventory. Now, which is considered a seller's market. Now we have 7.5 months of inventory, which is right on the border of what we call either a balanced or leaning towards a buyer's market. And that's the condo market. But if you look at, let's say, single family homes in Martin County, it's a little bit different of a story. So we had this time last year 3 months of inventory, and now we have about 4 months of inventory, which is still considered a seller's market. So
Gotcha.
It's a little bit of both.
So it's a little bit of both depending
Correct.
on the property type.
Correct.
Wow.
Yeah.
Great insight. It's like almost like you came prepared.
Well, you have to stay on top of these numbers and the data, because this is the stuff, like if you don't know this, then how are you going to negotiate? How are you going to sit down with a seller and tell them what to expect? I mean, pricing right now is more important than ever, just because we do have more competition. So you have to put your best foot forward, and it's not, hey, let's test out the market. I mean, you only have one chance to make a first impression. That applies in this as well. You have to go out there with your best foot forward on day one.
Yeah.
Awesome. So do you have anything to say about, no, you covered the inventory. What about time on market? Like, or do you have any numbers, or do you have any idea about how long things are sitting? Are things flying off the shelf? What do you see there?
Again, it's going to be, it varies based on whether we're talking about, condos in St. Lucie County or whether we're talking about homes in Martin County. So median time to contract, actually they're pretty similar. You've got between 40 and 50 days on average time to contract. That this time last year, that number was about 30 days. So we have gone up.
And that whoa, that sounds like to me that it almost coincides with the slight rise in inventory.
And I mean, we're seeing more things sitting, as far as condo inventory. We're seeing more things sitting longer, just because there's so much competition. So I mean, you really have to price right, and then you really have to hire someone that's using multiple avenues of marketing, not just putting it on the MLS, because you have to be seen by everyone.
Yeah.
Dani, your videos are starting, well, you certainly have a brand. And like, I'm just waiting until you're like, oh my God, HGTV called. I've got a show now.
It's funny you say that. My videographer says the similar things. HGTV, she's ours.
Every single one of them has the best view. It's like the next one is the best view I've ever seen in my life, and then the next one is the best view I've ever seen in my life. It's amazing.
So that one with the 21 feet of window overlooking the ocean is just wild.
That is, so that you don't get to see like that. That's the first time I've ever listed a condo that was like that, with 20-foot, floor to ceiling windows. I mean, that you can't beat that one. That's the best view.
Yeah. Until I don't know. Because you always seem to outdo yourself. I'm sure there'll be another one.
Next.
There's one that's just going to be like the Tesla.
Just an entire glass hat. The entire thing is just glass all the way around. That's it.
Uh-huh.
Yeah.
So in this kind of market, what you heard Adam and I talking about seller concessions earlier. So are you seeing, what percentage of transactions right now are you seeing seller concessions on?
So let me preface this. Are the buyers that I have, so I'm primarily a second home buyer. So I represent people that are buying second homes, vacation homes. They're not here, all year round. I do have a smaller percentage, maybe about 25% of my business, that are primary home buyers. But a majority of the people that we represent are cash buyers. So I think I maybe gave Adam like one that was mortgaged. Because we have just a lot of cash buyers. And that's
man, what an amazing niche you've carved out.
Well, it's just where we live. This is people come down here, they want a second home, they want to escape the cold. So that's what it is. But the concessions that we see aren't always necessarily surrounding mortgages. So we're going to see more things for, monetary, for repairs, things along that line. So we don't see as much of the buy downs, although, I saw Adam's post the other day. I think it's genius to take, the money that the seller gives you to buy down your rate. Assuming that the numbers work out, right? I think that's a genius strategy. And most certainly, I would have them talk to one of you guys if they were getting a loan.
Yeah.
So, I come down to Florida. I'm like, the market's exploding. What a great place for a mortgage lender. And then literally, it's like 80% of people I talk to are like, I'm just going to buy in cash. Well, I think that those people, as rates come down, will see the value, in maybe keeping some cash on hand or keeping their cash in the stock market, reinvesting, diversifying their cash. I get it. People are buying second homes. They got discretionary income. But just because you have it doesn't mean you need to spend it, or it doesn't mean that there's a better place to put it than in the equity in the home. The home's going to appreciate at the same rate regardless of whether or not you put all cash down or take a 50% loan out. If you take a 50% loan out, you've got tax-deductible interest, a little bit of a tax shelter, not a huge one, but a little bit. And then you can reinvest the other portion. Talk to your financial advisors and see. That's
this
what
message brought to you by Adam DeSantis.
See what they.
That was great. That's fantastic. The other thing, in terms of getting creative is talking to folks that, where they're struggling to kind of check all the boxes, right, and buying a house. And obviously, Dani, probably wouldn't apply to a lot of the folks that you work with, right, buying second homes, but the folks that are looking for a primary residence that are having trouble to check all those boxes that want to be cash buyers is, not putting all that down and utilizing some of that income or utilizing some of that money to take care of some of those repairs or not repairs, any upgrades to a home to get it to check all the boxes, right? Instead of it being out of the box ready, you can kind of put your own touches on it and make it yours and check all the boxes yourself. So we
had that Adam just helped, we closed a loan recently, and that's our buyer had, enough money to pay cash, but he decided to go ahead and get the loan with Adam. So that way he could renovate. The whole condo needed renovations.
Yeah.
So he did exactly that. And it's a genius move.
Yeah.
Getting the home, you guys tell me, but waiting and later getting home equity, things like that, you're going to be paying more in interest you tell me.
So yeah, you're exactly right. So, first thing is you're going to be hard pressed to find a lender that's even going to lend a home equity loan or home equity line of credit against a second. So there's that problem that you're going to run into. And then the fewer banks that do it, the more risk they feel like they're taking, the higher the interest rates. So yes, if you can even get it, it's going to be a higher rate. So you're probably going to end up either digging out more cash from your investments, which, you don't necessarily want to take money out of the market, I don't think. So there's that. And then there's the fact of all right, so I'm going to finance $100,000 worth of this work, and I'm going to go get, a personal loan or some kind of loan to do it. The interest rate's going to be higher than the mortgage rate.
And you're not going to be able to write off the interest on that. So, yeah.
It's definitely something to think about. If you're buying one of Dani's,
20-foot windows and
yeah, maybe not that one. That one's probably turnkey. But if you've got one that needs a kitchen updated or something like that, think about it. Think about it.
I love that. Well said, Ed.
So, all right. So, Dani, what's going on? What do you got going on? What do you want to talk about?
Well, the biggest thing that we're seeing in this market is sellers who just want to test the market. And that's really, I think it's more important than ever, to tell people that you can't do that right now. You absolutely cannot do that right now. And there are, all the stats show that you have to go in at market value to even get showings. We have sellers that are like, oh, we'll just test it and then drop it in a couple of weeks. what happens when you do that is you lose all the attention that you had the day that you went on the market.
Right.
So I mean, one thing I can say is, just pricing right now is more important than ever with all this inventory we have coming on the market, making sure that you have a buyer's agent that's on your side with the right team of lenders, inspectors, all the vendors that you need. I mean, all of these things are so important right now because we are seeing a bit of a shift in the market. So it's just important to have the right representation.
Yeah. So if somebody is looking to put their property on the market, and obviously you mentioned one of the biggest factors is pricing it right, what are some of the other things that they can do to increase their chances of getting that traffic and getting offers, if anything?
Well, I mean, price is number one because people search, so if I don't know Hutchinson Island, I'm getting a second home, I'm going to search, my budget is 800,000. I'm going to look, I'm going to pull up to 800,000. Let's say that, hey, I'm going to test the market. My condo is really worth 800, but I put it on at 850. Guess what? Now you're not even getting looked at.
Right.
So obviously the pricing is number one, but then also where is your agent marketing it? Are they putting it on multiple MLS services? Are they putting it on YouTube? Are they putting it on Instagram? Are they sending out emails to all of their other clients, to other agents, to, where you have to be seen?
Yeah.
So pricing, marketing, and your condition of your unit. So, I mean, another thing is anything like deferred maintenance items. Like, let's say if you, walk in and there's huge, scratches in your paint, or there's rust on something, or, little things that you can not, you spend a couple $100 to fix, do it, because people think if that's wrong, what else is wrong with the unit? Yeah.
So you made a great point as far as social media goes and putting things on YouTube. How big of an impact does that have? I mean, you've obviously done a great job with your social media presence, and you're very active with all your listings. How much help do you think that is, and how much do you think that's kind of changed the game for the realtors that are very active?
The realtors that are doing it, I mean, you're getting, hundreds of thousands more views on that listing. And it just takes the one right person to see your listing, to get that offer, to get the deal under contract. So, I mean, how much of an impact? I mean, every agent would have to trace where the deal, where these deals are coming from to see how much of an impact it has. But the thousands of views that you're getting that you wouldn't have gotten otherwise, I mean, it's a huge deal. Absolutely. And those folks that are sharing it with somebody else, like, oh my God, you got to take a look at this property, right? So, and it just kind of spreads from there. It's amazing how crazy things have got. I mean, just how much social media has changed the game. And it's been for a while now, but there's so many folks out there that don't do it. And you would think that they're just at a tremendous disadvantage, right? If you're not. Yeah, no, it is. You have to be in front of all these people. I mean, and I've got agents following me all over the country. So, when they have, and guess what? Where do their buyers want to be for their second home? Florida. So, right. All these agents, they're seeing it. They're going to push it out to their clients. It's a big deal. Yeah, absolutely.
Cool. Well, all right, Dani. Well, thanks for being our first.
Oh my God, your name's going on the wall. I can't wait. We don't even have a wall to put it on yet. We're going to find a wall, and then your name's going on that wall. I can't wait.
We might name the wall. Instead of putting your name on the wall,
we're going to leave out the Wareagle part, though.
Yeah. No, I like that.
Dani's second timers. Dani Wareagle Warrington, condo Queen of Hutchinson Island. Every time you come on the show, you get a new nickname. Yeah. That's what's happening here. So you've got two nicknames now. I'm going to need you
to send me the recording of that intro, because I'm going to post it, tag it up on my social media so people can hear it over and over again. So that's awesome.
That was well done. That was a great intro.
Yeah. Yeah, maybe I'm going to put maybe we'll put some music to it, like
Eye of the Tiger.
Ooh, I like that.
Eye of the Tiger, or just bam.
Yeah.
Some AC/DC. It would be like AC/DC. Think like Undertaker coming out of the tunnel in WWF.
It's gonna be intimidating. I don't know. It might kind of scare people away. We'll see how it works out. Hope for the best, Dani.
Awesome.
All right. Thank you for joining us. I hope you have a great Friday. And we'll get this out as soon as possible.
Thanks, guys.
Nice talking to you again. See you, Dani.
Bye.
All right. See ya.